All right, since there's not a live stream this evening, I wanted to make sure I get this Ethereum video out so that you guys can be aware of the Ethereum levels that I'm watching. Guys, our ascending triangle has broken out. Everything has gone according to plan. With these ascending triangles, we like to long the third touch. Personally, I longed 1190, closed the trade down early to move into a different trade. It's coming back to bite me, but look, it is what it is. And we did not get the chance to buy back in on a retracement down to the trend line around 1260. That's okay. Maybe we fall back in, right, and get that opportunity. Either way, we are stupidly long spot ETH anyways, and this is a very, very welcome sight. Now, where is this going to run into some resistance? A couple of things we need to be aware of here. First is CPI tomorrow morning. By the time you watch this video, it may already be tomorrow morning, and we may have some crazy price action. Joe Biden is coming on to talk about CPI, I believe at 10 a.m., and CPI releases at 8:30 a.m. This tells me that CPI is probably going to be extremely good. It's going to be very, very low, and he's probably going to be doing a victory lap. And markets are very likely starting to price that in. I think the CPI reports, who knows, maybe they have leaked. But the market is, regardless, very optimistic about this, about inflation coming down. And we're starting to see this rally. How far it can go is unclear. Markets can react really strangely to CPI readouts in advance and then crash. The last CPI readout, we got resistance, even though the CPI came in low, and we fell down to around 1160 or so. So we need to be aware of where this trend could stop and run into some resistance. So I have marked that out. Now remember, 1340 to 1350 was this super strong level that we've already gotten rejected at twice, but we just recently broke through after an initial kind of pit stop there, a little bit of a rejection. So we could very, very easily come back to test 1340 from the top side. In fact, I'd be a little bit surprised if we didn't at some point. So if you're looking for an entry point, this is pretty standard. Not only does it play into the idea that, hey, this could cool down after CPI a little bit. It gets, maybe ramps up a little bit, gets a pullback, some volatility. You could look for a long entry at around 1340, and I think that's fine. And it's just traditionally how you trade an ascending triangle. There's two major entry points that you want to look for. The first is that third touch of the ascending triangle, and the second is a retest on the breakout of the ascending triangle, and then we target higher up. Now be aware, look, we could get some weird funky stuff happening in the market tomorrow. Maybe we get a pullback, maybe this is a false breakout, and this thing could fall back into the triangle or even lower, but we're going to play with probabilities here. This is showing us the direction that it wants to move in. We're not going to resist it. We're not going to fight it. So as far as where to consider taking profits on existing longs or maybe opening shorts once we get to some of these higher levels, we're going to use our long margin pressure levels to map these out. So we have our most recent swing lows here. Our most recent swing lows is giving us some resistance around 1430. Now note, there is a lot of resistance around this level. 1420 to 1430 has in the past been previous support, but it's also a heavily congested zone based on the fact that it was our previous all-time high last in January of 2018, 1440, 1430, depending on what exchange you were on. Most are 1440. So this is kind of a key level, trying to fight to get back up above the 2017 bull market's all-time high. So we could run into a little bit of resistance there. In fact, if we did something like this, I wouldn't be too surprised, or even saw some consolidation above this ascending triangle. Now, if we really start running, where could we get some more additional resistance? 1612. Right? And then potentially 2150. And we actually have quite a bit of confluence here on the long level. So I'm going to mark those two levels out here with our blue lines. And we're going to move our margin pressure levels back. And the reason I'm using the long margin pressure levels here is because this market is not necessarily reacting heavily to shorts coming in. We've gotten through that big short level now. Now it's all about how far can these buyers push this market up. So I'm more leaning towards using the long levels than the short levels. Now, if we move this back a notch, we see that key resistance here at 1340 that they've been able to push through, but we also get a little bit of resistance here at 1509. And you can see where that has previously come in as a support and resistance level in the past. Right, so 1509 is going to be a key level and probably the first target if we really start to run here. You could easily consider entering a short there, or if you're already in a long, taking some profits here. right? We're starting to break out from this ascending triangle. Usually you target a fair bit higher. So the two levels that I'd be looking at is basically 1500 and 1600. Now, if we move our long margin pressure levels back to our what has been our bear market low and what very well may be the bear market low for Ethereum, if it does not, if we do not see a catastrophe or further capitulation later on, and this turns out to be a really solid bear market rally, then what we could be looking at is a situation where we check out 1767, right? I do want to give one other level, and that is, or go back to revisit one other level, and that is 2160. Guys, this has been a very, very, very important level. You'll very frequently see the shorts start entering again on that first dead cat bounce. You see this pattern all the time where we run it all the way back up, right? And it comes, and that's where the shorts start getting comfortable entering again. That's where the longs are no longer going to be able to pressure it up. So 2160 has historically been a really, really strong margin pressure level from a short perspective as well. So 2150 gives us some confluence there. But these are the four levels I'm really looking at. In 5, if you count the retest of 1340, I think 1340 is fine to buy. Take a chance on it. It's not ideal. It's not 1190 by any means, but it's certainly a support level now that we've broken up above it. So 1509, 1612, 2150, and then of course this margin pressure level in here that also has been key resistance in the past, which is around 1764. So I'm going to toss those levels over in the trade levels in the Sistine Research Discord, and hope to see you there. If you are not subscribed to Sistine Research, go over to the link in the description below. It's sistine.ai. And if you're looking to trade on leverage, there's a link in the description below. You get some sort of sign up bonus for Bybit. I don't keep up with what the rotating bonuses are, but if you're looking to potentially open an account and trade this, use good judgment, practice, use small amounts, but there is a link in the description below if you want to check that out. It's at Bybit. All right. Thanks so much for tuning in. We'll catch you later. Peace.